Welcome to the Mike the Money Coach Show, where we talk about tax tips, money making techniques, retirement planning, and more. And here is our host, Mike Velarde, the Money Coach.
Welcome to today's show. Today we're going to be talking about money. But we're going to be talking about the number one technique to make more of this than anything. This is the number one stock commodity trading technique out there. It's worked for probably over 100 years. I'm going to show you in both stocks and commodities how this particular technique could have made you an absolute fortune. What we're going to do is we're going to let me tell you what it is. It's you're looking for a certain pattern. The pattern you're looking for is a channel. When you get a stock or a commodity that's trading within a range, going from, let's say, from $1 to $10, whatever that range might be, you're going to track it. And you're going to put an order to either buy it above the high of the range or sell it below the low. So, for instance, let me use a couple of examples here. We find with, we're going to use stocks, for example. Amazon stock. From 2004 through 2015, it traded below $20. So anywhere between $2 and $20 it traded. Didn't do anything. But suddenly something happened with Amazon where it broke above that $20 high. Well, it was in that pattern for years, over 10 years. And this is the explosive pattern we are looking for. Once it broke above that $20 high, guess what Amazon stock did? It went from 20 to 100 in just a few short years. You could have made 5 times your money with Amazon. And then when it broke above 100, guess where it went? It went to almost 200 at 190. That's the pattern we're talking about. And we can find it in stocks and commodities. And a very simple technique. It's a very simple technique, but it's a very powerful one. Now, this is not going to be something you're going to do every day. This is something you're going to look for these patterns. And then when you find them, you're going to put what's called a resting order. In other words, that order is just going to sit there. It's going to rest. It's going to rest above the highest high price or below the lowest low. Usually in stuff like stocks, obviously, we're just going to go long. We're not going to be short selling. So we're going to place what's called a resting buy order above the highest high, right? So in Amazon, if we did that in 2015, it went from 20 to 40 within a couple of months, doubled its price. When it broke above 40 and went quickly from 40 to 100, it pulled back to the $70 area and went to 100 again, pulled back to 80, and then from that 80, it rocketed all the way up past 180. Okay, now today it's back down to 102. But this pattern is seen time and time again in stocks and commodities, and it's the one pattern that you can use to make a significant amount of money. All right, so we talked about Amazon. Let's talk about some of these other stocks like Tesla. Now Tesla really was perfect stock for this pattern. Tesla for years was under $50. Just stayed in a range 14, 15, 16, 17, 18, 19, 20. Didn't do anything until 2020. Then it broke above it. Now it broke above 50. It pulled back a little bit to about 25, and then it rocketed all the way up to over $400. So this is the one pattern that could make you more money than any other pattern, and it's safe, and here's why it's safe. When we place that resting order in there, once we're filled, we want to place a stop. You have to manage your money. If you want to hold on to money, you have to manage it well. You always have to have risk. Risk management is really the key. You could have $300 million, and if you make a wrong trade in the futures market, you could lose it all, right? There's been stories about people that have actually, one guy in particular in Britain, he lost the bank back in the 1980s by taking the wrong position in the futures market. So you have to, money management is the key. So with this particular technique, what we're going to do is we're going to look to buy the highest high, right? When it's in the channel, even if it's, and the longer the time period, the better, because that means that when it breaks, it's going to break big. So when we look at Tesla, right? Again, the perfect example. It was in that pattern for years, right? 7, 8 years, and then it broke. And when it broke, it went big. When it got above 40, it went to 50, and then it came back a little bit, and then it just went up to 100, past 100, all the way to 400. And so today we're going to just talk about this particular pattern, and I want to show it to you on not only in the stock market, I want to show it to you in the commodity market. And in the next segment, when we come back, we're gonna go to the charts, and you're going to see all of these particular charts. And I want to particularly show you how it works in commodities, because in commodities, that's where the real money is made. Okay, so let's talk about that. Let's go back a little bit and give you an example of the S&P 500. Okay, the S&P for many years was, trading in a range. From the 80s to 1994, it traded in a range, but then in 94 it broke out. And when it broke out, it went all the way up from 94 until March of 2000. And in March in 2000, it hit a high, and we have that chart too. We hit a high of 1,600. And from that point on, it hit the 1,600. It sold off when we have what's called the 50% rule. It came back down to 800, right? So it came back down to 800, and then we had another rally, right? For 2.5 years, we had that bear market, if you remember it. And then from 2004, it started going up again, and we hit that 1,600 again in 2008. And in 2008, what happened? The market got tanked. And where did it go back down to? Went back down to that 800 before it rallied back. When it rallied back in 2013, it retested the 1,600 area. When it finally broke above 1,600, it quickly went to 2,000. When it broke above 2,000, it went up all the way almost to 5,000, over 4,600. Now today it's still at 4,100. The point is, when it comes out of that pattern, out of that channel, right, and it'll be in the channel for a long time, it absolutely explodes. And that's when you make your money, on that explosion to the upside. Because at that point in time, everybody wants it, right? Look at oil. Oil's a perfect example. Oil, if you remember just a couple of years ago, you couldn't give it away. Oil sold off to negative $40 in the futures market. Negative $40. That means that a barrel of oil, they were paying you to hold their oil. Now that didn't last very long, okay? And now, of course, oil has skyrocketed since. The point is, when you follow the breakout patterns, the explosions happen quickly. And again, we're going to be back. And when we come back after the commercial break, I'm going to show you each of these charts, both for the futures and for the stock market, so you can clearly see it. I know it's probably tough as I'm talking just about it because you can't see it. I'm going to give you that visual, like I said, when we come back from the break. All right, and we're going to be taking a break in a minute. But right now, I want to tell you that the money is to be made both in futures and in stocks. And I'm going to show it to you clearly, teach you the pattern, teach you how to manage your money, teach you how to follow up your trades. So once you're in a trade, you don't get taken out of it. So you got to keep your stop loss far enough away so that they don't play with it and quickly just run the stops. I mean, that's a technique that's used. That's how futures traders really get their butt kicked, is they'll have the professionals come in there and just run their stops, take their money, and go off with it. So we don't want that to be you. So we're only looking for these big trades. We're only looking to get into the markets when the opportunities are absolutely in our favor, at least 90%. All right, that's when we come in. That's when we're going to use these techniques. And these techniques have proven to work for over 100 years. Jesse Livermore used them. W.D. Gann used them. This is the #1 technique. Bruce Gould used them. All these people that had made themselves millionaires, multimillionaires, have used this one technique probably more successfully than anything else. Why? Because you're always going with the trend. When it goes to a higher high, everybody wants it. And when everybody wants it, that's the time to buy it. When everybody starts selling it, that's when you want to get out of it. That's what happened with crude oil, right? Everybody started selling it, and the selling got so severe that it went past the zero line. There was one poor guy that lost over $1 million because he was trying to get out at zero, and it went to -40. Okay, and he held that position, and you just couldn't hold it, and it cost him millions of dollars. And of course, staying at -40 didn't last too long. It ended up coming back, right? And we know today, of course, crude oil is back into the $80 range. But the point is, we always want to follow the trend. So let's cut to the commercial, and when we come back, I'm going to show you the charts. Thank you.
Text alert! Text alert!
I was receiving letter after letter from the IRS.
I got Mike Vellotti on the phone, and I said, Mike, I got a problem.
He took the pressure off my shoulders.
He just made me feel like I had Superman on my side.
Trust me, he's the man to go to.
IRS problems? I'm Mike Vellotti, enrolled agent. I can help. My company, Winning Tax Solutions, has always gotten our clients the best possible results. Visit us at winningtaxsolutions.com or call us today.
This message was brought to you by Warburg Equities and the Cricken Law Trust.
Hi, I'm Adam, an associate with the Cricken Law Trust. We're here to help you process money owed to you through the CARES Act. If your business employed 10 or more people and maintained payroll taxes through the 2021 shutdown, the Cricken Law Trust can help you get your money back. This money is yours, but if you don't apply now, you might lose this opportunity and it'll be gone forever. Contact us now. Go to www.my123erc.com. Now that's www.my123erc.com.
You're watching Mike the Money Coach, where we talk about tax tips, money-making techniques, retirement planning, and more. Now, welcome back to the show.
Welcome back to the show. Okay, so now here's what we're going to show you where you can see it on the charts. So I'm just waiting. Okay, there's the first chart. Now the first chart should be of gold. Now you can see, if you're looking at the chart, I'm going to step back. We want the bottom, which is there. You see the bottom of the chart, and then we go to the high, right? And we draw what's called a channel line in, right? So you're going to draw from that high right across. And then when it explodes out, as you see that explosion, the price nearly more than doubles or triples. And that's that's the sweet spot. Let me get it right on the chart here. You see it right there where it explodes. So we're going to put our channel in. We're going to draw the highest high, the lowest low, and that's going to be our channel. As long as between there, we don't do anything. We're going to have a resting order to buy above that high. So when we go back here to this high. When we get above that high that I'm pointing to, right? That's when the explosion happens. That's when we want to enter this market, okay? And now that we see it with the gold market, we're going to see the same thing with the silver market. We're going to go to the silver market and take a look at silver now. Okay, silver, it's even more pronounced, right? Because you can see once you're in that range here, you see that range and it explodes. Look at the explosion. Just think about that. If you had a couple of contracts and you waited until it exploded to the high end, whether it be back there in the 70s or it be in the 2000s where we are right now, it's a huge amount of money. Huge amount of money. And when we're going to put our stop loss below the low, right? So you're protected so they don't take out your stops. But look at the opportunity to make a fortune here. That's the silver market. Silver's very volatile. Goes up, goes down. But when you're buying it when it's going higher and selling it when it's going lower, that's when you're making the money. All right, so let's go to the next thing. Let's take a look at the crude oil market. I was talking about crude oil before. You can see on the chart, I'm pointing to it, you can see where it went negative to that negative $40 there, okay? But look at the pattern. You go back and you look at the pattern and you see the bottoms here, you see it was in a range. You see that range? For a long time we had that range. And then all of a sudden it exploded. When it exploded above that high, it quadrupled in price. And what does it take? You're simply going to put in your order. You're going to leave it there. If it never gets above it, you never buy it. But you know when you do buy it, you are buying strength. You are buying a winning ticket. You want to talk about winning the lottery? This is winning the lottery. Now, you got to watch out that you're not still holding on when it's coming back down. So the next show, we're going to talk about trailing our stops up, protecting our profits, and actually projecting, right? The next show, we're going to talk about projecting where to get in and where to get out, how to measure the range, right? And pick our spots, right? So for instance, in crude oil, when crude oil sold off, I started buying Exxon stock. And I more than doubled my money in Exxon stock in a year because I knew it had to come back. After that negative 40, right, it couldn't stay there too long. And it certainly didn't. And when you go back and you look at the chart, you could see clearly, right? Right there, that was the bottom, right? But it came back and boom, it went up and that's what, now we're back in a bull market, right? Oil is about $80 a barrel, right? It was up at 120. So the market has changed. So we got to follow it wherever it goes. That's the key. But again, look at the breakout. Look at what happened after it got above the highest high from that channel. So this is like a channel trade. We want to buy the rest, place our buy order in there and wait for it actually to happen. All right, so now let's go to the S&P. That's our next chart. I want to show you how it works, not only for a variety of commodities, but for a variety of stocks. So you can use this in either the futures market or the stock market and still get very, very good results with it. All right, so you can see here in the S&P, you had those two highs. You see, it looks like a little mountain there, right? Right over here, that mountain over there, and then the other high right over here. Once it exploded, so you put a line across those two, and once you get to the highest high, when it breaks above that high, you get that explosion. So you look at the right of the screen, you look at what the S&P did, right? We went from that 1600 area to over 4,000. Well, if you're buying this on the futures market, you made a great deal of money, a tremendous amount of money using this technique, right? And we also know that stocks, for the most part, are in a bull market, as you can see from the chart, but there's going to be a period of time when you're going to get a bear market. Now remember, from the October of 94 is when the bull market really started, right? Now, according to Gann, the fifth year is always an up year. So 95 really started that bull market, and it ran from October 94 through February of 2000. And all it did was go straight up, and you can see it. You can see it there on the chart. Let me go back over here. Yeah, there it is over there on the chart, right? And then what happened? Then we went into the bear market. 1600 was the high of the S&P. When it pulled back to half its value at 800, right? And then that was it. It didn't go below the 800. So the 50% rule, which is another rule we'll talk about in other shows, right? The 50% rule held. And then when it rallied back to that same 1600 area, right? And then in 2008, it sold off again. and sold off to that 800 area, and then when it rallied past 1600, guess what? It exploded to the upside, and that's what you're seeing on the chart. When we come back, we're going to talk about the stocks. I'm going to show you the pictures of them. We'll be back in a minute.
Text alert! Text alert!
I was receiving letter after letter from the IRS.
I got Mike Velarde on the phone and I said, Mike, I got a problem.
He took the pressure off my shoulders.
He just made me feel like I had Superman on my side.
Trust me, he's the man to go to.
IRS problems? I'm Mike Velarde, enrolled agent. I can help. My company, Winning Tax Solutions, has always gotten our clients the best possible results. Visit us at winningtaxsolutions.com or call us today.
This message was brought to you by Warburg Equities and the Cricken Law Trust.
Hi, I'm Adam, an associate with the Cricken Law Trust. We're here to help you process money owed to you through the CARES Act. If your business employed 10 or more people and maintained payroll taxes through the 2021 shutdown, the Cricken Law Trust can help you get your money back. This money is yours, but if you don't apply now, you might lose this opportunity and it'll be gone forever. Contact us now. Go to www.my123erc.com. Now that's www.my123erc.com.
You're watching Mike the Money Coach, where we talk about tax tips, money making techniques, retirement planning, and more. Now, welcome back to the show.
Okay, so welcome back. So now we're going to take a look at using this resting order technique, right? The channel technique, I call it, on stocks. Let's look at Amazon. Our first stock, I think, is Amazon, right? Okay, so look at Amazon. You see, for years, Amazon just hung for years in that little range. And you see that range right over here. And then when it exploded, look at the explosion. $20 stock to a $400 stock. I mean, it just absolutely took off. Now, the real key here is, again, making sure as it goes up, we're adding to our position, which is another technique we're going to learn about, right? So we use the profits that we're making from the stock to buy more stock, but then we have to trail our stops up, get behind them, so when the market comes down, we get out, we don't get harmed. But we're not going to show you today, but I'm going to show you in another show, is how to measure where the next high should be, right? So we're going to start measuring our pivot points to get in and get out. But this is the number one technique, and again, as I said, I got to show it to you. You see how the pattern is, right? Look at it. It's in a little range, and then when it explodes, it goes. That's when we buy it. We don't buy it until then because it's a confirmation that it's going up when it goes above the highest high for the last 5 or 6 years. Next stock, Tesla. Similar pattern. Look at Tesla, same thing. This stock was sitting in for $20 for years. I'll get out of the way so you can see the chart. Years. And then when it exploded, boom. Very short time, goes from 20 to 400. Explodes to the upside, right? Now, the key is trailing it up. In other words, we want to add to our position as it goes up. We want to trail it up so we can't take a loss. If it comes back down, as you can see, Tesla has gotten very volatile over the last couple of months especially. We don't want to get caught and wiped out. So we want to make sure once we make the money, we keep the money. That's really important. All right, let's go to Norwegian Cruise Lines. This is one I use to make quite a bit of money with. You see that big drop in Norwegian? Guess what that was? That's right, that was 2020. That was the coronavirus. Well, when it dropped like that, I realized, hey, this is a great opportunity. Sooner or later, we're going to get back to normal, and the stock's going to come back. So I bought it right towards the low there on your screen and sold it when it went into that high area, took my money, went home, more than doubled it, which was very nice. But again, we see the pattern, right? So if you look at that the big M over here, see that's the bottom. And you see when it broke that low, that bottom, it continued to go a lot lower, right? And of course, that was the coronavirus. That was probably a once-in-a-lifetime event. But that also created a once-in-a-lifetime opportunity for stock and commodity traders to make a fortune if you waited for the right time to get in on it. And if you did, you made out like a bandit. And I was fortunate enough to do that myself. Okay, so let's take a look at the next stock, the Mesabi Trust. Now, the Mesabi Trust is an interesting company because they deliver like iron ore, okay? And they're a very high dividend payer. And I use this particular stock in my IRAs because it pays out a great dividend, and I like dividend stocks. But it fits our pattern here perfectly. If you go back and you take a look at the chart, you see where I'm pointing, see those lows, see how it's in that range for a very long period of time, right? And then when it explodes outside of the range, again, we want to buy it at the highest high of the range, and look what it does. Look at that explosion. Quadruple your money in almost no time. And then it goes up, it comes back down, goes up, and now you're starting to see another range pattern. But here's what's good about a stock like this. It pays out a 14 to 15% dividend. So you are going to make money on your money. If nothing else, if it just sit there, if you just had it for a couple of years, even if it was in that range area and you owned it, right, you were making a tremendous dividend from this particular stock. But again, what I really want to emphasize here is the pattern. For such a long period of time, the stock did nothing. When it exploded big time, and that's where your money is made. All right, so let's go to one of my favorite stocks, ExxonMobil, right? I love Exxon because they pay well. They make a lot of money. They make billions of dollars, and they pay billions of dollars out in dividends, all right? And Exxon, I was very fortunate again when I saw that the oil had sold off. I got it for a third of what it's selling for now. But look at the pattern, all right? And this is what I want to emphasize, the pattern. We see that range, that we go back to the beginning of the chart here, not right, there's the explosion, right? Right? You got the range, and then what happens? Boom. It explodes and more than doubles in price. It comes back down, right? And then it explodes again. So if we keep placing buy stops above the highest high, right, in these different ranges, that range, and then this range, and then the next, we keep making money. All right, so this technique, we're going to buy it above the highest high. We're going to place our sell stop below the lowest low, right? And then we're going to trail them up as it goes in our direction. That's probably the number one trading technique that I've experienced in my years, and I've known or heard about. If I didn't know them personally, I heard about people who used this one technique only and made themselves millionaires and multimillionaires. It's a tremendous technique, tremendous tool. And what we're going to talk about next week a little bit is how to measure, right? Measure when we get the breakout, where to put ourselves, right? Where we're going to get resistance, natural resistance. As you can see in the chart on Exxon, it hit after the breakout, it hit resistance, right? Came back a little bit before it went again to the next level. So I sincerely hope you enjoyed today's show. I hope you got a lot out of it. That is one of the number one trading technique to make money in the markets. As you can see, it works in stocks and it works in commodities. And if you manage your money carefully, you will make yourself a fortune. So I want to thank you for watching today's show, and we'll be back next week. And I am Mike the Money Coach. Thanks for watching.
You've been watching the Mike the Money Coach show, where we talk about tax tips, money-making techniques, retirement planning, and many more. Join us again next week with Mike the Money Coach.